Just as April looked poised to close on a historical low, a glimmer of stabilization may be emerging. While uncertainty still looms over global markets and corporations like Tesla struggle with political fallout, a coordinated pivot in tone from top US officials is signaling a potential cooling in the chaos. De-escalation in sight, trade talks enter a new phase. Treasury Secretary Scott Bessent surprised many with a dose of realism this week, telling investors the US-China tariff standoff is unsustainable and de-escalation will come in the very near future. While President Trump's earlier tariff blitz had kicked off retaliatory measures, Bessent's comments, paired with a calmer tone from the White House, hint at a possible shift. At a press briefing, Press Secretary Caroline Leavitt echoed the optimism, saying the administration is setting the stage for a trade deal with China. Though formal talks haven't resumed, Leavitt confirmed the US is engaging with 34 countries, seeking to isolate China economically while building new coalitions. Even Trump struck a softer note, saying the eventual tariffs on China would be nowhere near the 145% ceiling previously floated. This cooling rhetoric sparked a market rally and lent weight to the idea that behind the bluster, real diplomacy may be at work. Trump walks back on Powell as gold cools. Perhaps the most striking about-face came from Trump's stance on Fed Chair Jay Powell. After weeks of public berating and whispers of removal, Trump said he had no intention of firing Powell. The market took it as a win for institutional independence, and a signal that some voices inside the White House, notably Bessent, are still steering the ship away from the rocks. The immediate aftermath, stocks jumped, the dollar rebounded, and gold, which had just touched a record $3,500 began to retreat from its highs. Confidence, while still fragile, got a much-needed boost. Tesla's tariff burn, profits plunge, politics bite. Amid these macro shifts, the corporate casualties are mounting. Tesla reported a 71% plunge in net income for the first quarter, dragged down by trade disruptions, brand backlash, and CEO Elon Musk's polarizing political entanglements. Musk, who has been serving as Trump's cost-cutting czar, acknowledged that his role may be hurting Tesla's image. He pledged to reduce time spent in government starting in May. Meanwhile, Tesla is reworking its supply chain to reduce reliance on Chinese imports, even as protests and vandalism underscore consumer frustration across the US and Europe. The tariff decision is entirely up to the president, Musk said with a sigh. Whether he will listen to my advice is up to him. Despite the bad quarter, investors were heartened by Tesla's reaffirmation of new affordable models and its upcoming robotaxi launch. Final thoughts. from tension to tactics. The past few weeks were defined by volatility and uncertainty, but if this week signals anything, it's that the Trump administration may be discovering the limits of economic blankmanship. Besant's behind-the-scenes influence and Trump's recalibration on Powell suggest that even maximalist strategies eventually face market consequences. For now, the narrative is changing from escalation to negotiation, from threats to tactics. But as Tesla's earnings show, the damage isn't just theoretical. For investors, watching the political theater is no longer a side show, it's the main act.